Hey, if you've made it this far in the video and you are a real estate professional, consider partnering with me here at Real Brokerage. Pay nothing per month, get a fantastic split, and you have the opportunity to build a business through revenue share and stock purchases. Book a call at the link below in today's video, and I'm happy to have a conversation on why I was able to grow my business exponentially by moving my practice to Real Brokerage. All right, back to the video. No different. We're going to start things off with my good friend, Mr. Daniel Reese. I'm going to give him an opportunity to introduce himself and talk about some of the things that's going on in the world from an economic and an interest rate standpoint. Then we're going to jump in. If you guys got a copy of the agenda, we're going to talk about what's happening in marketing, new tips and hacks that I've picked up that I think you all will get value from, and you can add it to your arsenal. And then we're going to talk about digital networking and how to move the needle in your business from a laptop. If you are a trans extrovert, which is what I consider myself, you might think I'm an extrovert, but I'm very, very introverted. But, you know, I make it do what it do on all things YouTube, and that has helped grow, you know, my business, both, you know, relationships with great agents like yourself, but also buyers and sellers who are the individuals that keep the lights on. I'll show you guys some strategies that I picked up that's working in my business. And then we'll talk about some networking in our respective parts of the world. And then I'll let you guys get out of here before 1 o'clock. So without further ado, Mr. Daniel Reese, take it away, sir.
There we go. Hope I'm not. Yeah, make sure I'm not. Hey, thank you so much for inviting me, man. To be honest with you, I appreciate it. Come hang out and get to join one of your masterminds and go over things with folks. I will say that as far as the mortgage world, it's been a little weird lately. I don't know if you keep up with news, and it can be a lot more anxiety ridden for you, but we did have, they asked to freeze all federal funding, which included housing assistance this week. So we had quite a red alarm day going on, and everyone was like, what does that mean? Like, are you talking about our payment assistance? Because we have like 3 different grant programs for down payment assistance to help first-time home buyers and doctors and nurses. But like, are those going away, or is Fannie and Freddie like not funding, or is USDA and VA loans like just they're not closing at all until further notice? Like what exactly is happening? And ultimately, if you were following that was a lot of anxiety. And then like 3 hours later, they blocked it. A judge blocked it, and then the administration said that they're not doing it anymore. They don't want to. There's no further details on that, but yeah, if you hear clients, I would say be on the up and up on that. If they ask about, hey, what's going on with that, just effectively nothing. It's a lot of nothing is what happened. I know Mr. Trump has definitely demanded interest rates to be lower, and in a consumer's mind, that they believe that's going to be mortgage interest rates as well. Even, you know, now the Federal Reserve rate is not directly the mortgage rate, but that's how consumers see it. The Federal Reserve did meet yesterday, and despite those wishes, the Federal Reserve didn't do anything. They remained unchanged. They didn't go up or down, but I truly think that it's going to stay like that until we get about 6 months into this year. We're looking somewhere to be around a half to 1.25% drop, like straight up on interest rate. So instead of an average of 7% today on conventional, we're looking at like 5.75 to 6.25. But I don't think we're going to see any of that movement till halfway through the year. Our inflation numbers ticked up, unfortunately, just a little bit on our last reading, week before last, I believe. But I do think there's a possibility for rates to go down a little bit earlier. So technically, as far as the Federal Reserve is going, I don't think they're going to do anything until they see actual live financial policy. And that is not saying that we're doing tariffs and saying that we're going to do executive orders, but what are we doing? Like, what is actually happening? So I don't think they're going to be moving until they see what actually happens, and what the tariffs do go through, how much, where, and kind of assess then before they do anything on the federal side. I will say, despite that I do believe there is a movement kind of going on right now to where folks are going to be reaching out to their local state reps and to NAR and to their brokers, because there are something called LLPAs, and that's loan level pricing adjustments. And the government / Fannie Mae or Freddie basically have a tax on these programs. And there's different it just goes straight to them. It doesn't go to anyone. No one gets paid except for them. And a good example is investment properties. If you do 20% down instead of 25% down, then the government charges you a tax of 1.75% of the loan. And that goes straight to the government. Like, that's just what they charge. But they're trying to make a movement to somehow get this whispered into Donald Trump's ear, because he can't control the federal interest rate, but he can effectively write an executive order, and he can stop the LLPAs. And not necessarily that, technically that would make interest rates go almost 1% back across the board overnight. And not that, your Rocket Mortgage and everyone would just instantly give all away. I'm sure they're not going to give it all away. They'll still scoop some, but that could be a very significant catalyst to really get things moving. So I would keep an eye out for that, honestly, I'm for it. So, depending on how they actually go and do it, like, that would be phenomenal, because housing is very difficult right now. And the past 2 years, I've called it, frankly, just a pain market. And it's just been painful to where, unfortunately, we're not dealing with the same clients we were 4, 5, 10 years ago that were so thrilled about their new adventure and, their upgraded home, right? We're dealing with more, I'm relocating because I just got a job, or I'm getting divorced and I have to move, or I'm retiring. It's just more of I have to, not I want to. And folks are putting 2 and 3 bunk beds in the same room. So I do think there's a huge amount of pent up demand. And if they do get rid of those LLPAs and that goes, even if it's temporarily, I think it could give us like a huge boost altogether. But other than that, officially, the market has been volatile, but currently it's just flat, staying flat. And I don't think there's going to be too many violent swings one way or the other, realistically, for the next month or two. But the news cycle is pretty wild the past 7 days, so who knows? Pretty quickly.
And with all the executive orders and all that's happening, and I don't get political, everyone's personal politics need to remain personal, but I will say that I figured that the Fed wasn't going to do anything because it's a lot of other stuff happening, behind the scenes. But I anticipate within the next meeting that they're probably going to do something once core CPI comes out and jobs report, some of those other things, those other factors that they look at in determining where inflation is. For those that are on this call that is like, what language are you guys speaking? Just know that if our economy shows that we are moving in a positive direction from an employment standpoint, that will be one factor that helps to say, okay, we're in a better place. We're a couple of months or weeks through from inauguration, all that stuff that's been going on here recently. Now, where are we going to be for year 2025 and beyond economically? Because the Fed always does things very, very tactically, very dovishly is what they say. They're not, knee-jerk. At least Rome is what I like to call him. Jerome Powell is not knee-jerk at all. So how Daniel, can we prepare our buyers that are kind of on the fence right now, that are like, look, my credit's almost on point, my credit score is almost where it needs to be. I've been in my employer for coming up on 2 years. Those are two of the things that I always walk through with them, that they make sure their credit's on point, make sure that they don't change employers, or at least don't change industries if they change employers. And then, of course, the final factor is what they have in the bank. But what are some of the things that we need to be explaining to our buyers in this current environment in layman's terms?
Sure. I think right now, really just understanding where your buyer is going to be extremely helpful, to where, a lot of folks that I'm seeing, again, currently aren't, I'm selling my home and then I'm going to put $1 million on this other home. It's more people that are kind of struggling to get in there. But whenever you're working, whether it's struggling or first-time home buyers on there, it's really just about being able to get the client to open up to a conversation. Like, that's basic as you can be basic. Like, don't look for any other angles, because so many people are afraid to have the conversation that they won't even get there. And truly, I've mentioned this before, but I've had times where probably, honestly, once a month, I think, and that I'm like, hey, talking to someone, they have no money down. I'm looking at different down payment assistance situations, seeing what can make sense. And then I find out they have 6 figures in their 401k. And I'm like, hey, are you able to just double check with HR? I'm pretty sure that you're able to pull out of your 401k for a down payment and you don't get penalized whatsoever, and you're able to pay it back. And so far, that's 100% correct with the no penalty there. And they're like, up where it's like, literally that one question went from there's no way I can ever own a home to I have $100,000 down payment. And if you think those two mindsets, those are very different very quickly, but people are afraid to have that conversation. And you will have folks that also think that their credit is a 500. So they don't want to talk about it because they're nervous there. And I've had folks where I pull their credit and it's a 680. And they're like, well, oh, I thought it was worse. And it's like, well, until you actually have the conversation, like you're not using all the tools there. But we do, I mean, making to have a conversation and keeping your ears open, obviously the 401k that I just went over, but then we have a credit system that's free. I have a YouTube video I can link for it, but it's hyper specific. Don't have anybody ever pay for credit repair. We have a free service, and it's like if you pay $118.12, your credit is going to go up to 620. And if we're at 620, we're going to qualify for this program, so that it's like exact on what we can do. And we're able to go with the receipts and go to Equifax and Experian and be like, hey, update that credit report. They're buying a house tomorrow. And they'll do it within 3 days. So we don't have to wait 30 or 60 or 90 days. Like we can have an accelerated game plan. But just knowing those tools that can help, keeping your eye out for the 4K, just knowing that there's down payment assistance and being able to help with those. I mean, as long as you can get to the conversation, those are kind of just some key points. Because I don't say never trust your client, but I'd say 9 out of 10 times on applications, on finance applications, clients get their income wrong. And I'm not exaggerating. 9 out of 10 times they get their income wrong, unless it's specifically a salary that's like 60,000 and they put that in. Most of the time they're off on it and they don't even know what they're making. And folks don't know if you can use like certain overtime, or the opposite, you're able to omit overtime so that you could qualify for a lower income bracket loan and lower your interest rate by 0.5%. But if you're making, 50 grand in overtime or commissions and you're only making 50 in salary, we're able to omit the commissions if we can still get approved. And then we can be on the low income and get like a better rate. And one thing too, you said on the 2 years, but do know they changed like this past year, a couple months ago, I think they changed it for commission, where you only need a year approvable commission instead of the standard 2 years. So even if they've only worked for a year, if they got something, try to see if they'll sit down and just go a little bit more in depth and, just entertain and see if there's options,
So Daniel, you're referring to on the year individuals that, let's say, work commission-based jobs or entrepreneurs, things of that nature, fluctuating income. Is that what you're referring to?
Yes, but we can use 1 year now. We used to have to, like, if you're a realtor and you're filing, like it used to be, if you don't have 2 years with actually showing all of your income, then you're not going to be approved for a loan. And they've changed that to 1 year recently. Granted, ideally, you're going to want 1 full year rather than tax returns from October until December and be like, hey, will you approve me on that? They won't do that. You're going to have all 12 months. But that could be, that's a huge difference. I could take a client from thinking they have to wait a year to, I can go ahead and do it right now,
And let me ask you, and if anybody has questions, pop them in the chat or raise your hand and come off mute. I'm working with a buyer now that I picked up, and she was asking about 100% FHA programs. I know, and I don't know if some of the, as you mentioned about the freeze on federal stuff has possibly affected that. Can you explain what a 100% FHA program is, and if that would be advantageous to a buyer client, and if that's something that One Real, potentially can offer?
Yeah, ultimately, so I did find out, I guess I didn't finish that story, but I did find out that the grants that we use for our specific FHA programs aren't federally funded. They're privately funded. So if for some reason that does happen again, it won't affect our down payment programs. But with it, we have 3 down payment assistance programs, and one of them is a conventional, and it's a grant. It's my favorite. It's 3% down conventional loan. It has to be $350 or less for the purchase price, but you get a grant for 2% of it. So if it's a $300,000 home, the bank is going to pay the 6, and you're going to come out 3. Like it's $3,000 for your down payment, and not waive it. To be clear, like pay $6,000. You will get paid this money, and you will have that instant equity that is instantly forgiven with that program. That's why I like it, and they don't jack up your rate. But that one, it is $350 capped, and then it is based on income. You got to be at 80% AMI or less. Question though, real quick.
Go ahead, Tiara.
To Tiara.
She asked, can we get a script? Can you come off mute and explain what you mean, Tiara?
I can't hear.
I can't hear either. I don't think.
Mute.
Okay, she's trying to come off mute. While she's trying to come off mute, so with that particular program, that is through One Real Mortgage. For those of you that are guests or fairly new to Real, we have our own loan division called One Real. In addition to being with a brokerage, we have a loan arm, and that's what Daniel is a part of. He's as well a licensed agent. So that's through that program with One Real Mortgage, correct?
Yes, but to be clear with it, that is not pigeonholed. Any of these 3 programs on the down payment assistance I'm going over can work with any broker. Like Keller Williams, it doesn't matter. We don't only work with Real. I'm very specific if there's items that are specifically with Real to make sure, but with that one, none of these do. There is a program that's going on right now that was with Real, and effectively it's kind of like a new construction bonus, but Real, the company, the brokerage, is paying $2,500 if you use their preferred lender of One Real Mortgage. And they set it up actually in a touring agreement to where they did it whenever NAR was going crazy and people were worried, like, what's going to happen with my commission? And they're like, hey, we're going to set this up, and they can use $2,500 for their closing costs, or they can use it to pay towards your commission if for some reason you're not getting a full commission. So that way, in the very worst case scenario, we're going to get you $2,500 while you're a buyer. So they're looking out for the agents on that side. Well, that ended up, staying. So we did that another 3 months, but that one is a Real only where, hey, if you work with Real and One Real Mortgage, the real estate brokerage pays an additional $2,500 for there, which is dope. But all of these are open. The next one, down payment assistance, is the 100% FHA, and that one is a grant. It is forgiven instantly on 3.5% down. The downsides on that one is it's 7.7% interest, period. You got an 850 credit or you got a 580, which we can go down to a 580 with that grant if we can get them in there. But no matter what, it's a 7.7, which is annoying, but you're able to refi with no prepayment penalty after 12 payments, which always comes out to be a lot more than the actual grant. And then you just want to get a little bit more in closing costs, probably like around 4.5%, 5% on whenever you're using that, because most folks using that program don't have a heck of a lot of expendable money. But those 2 are my favorite. The third one is effectively the same thing as the FHA. It's just not a grant. It's a second loan for the 3.5%, which, given the situation and the scenario, there's reasons why we'd use one over the other. And, basically those are the 3 in order though that we prefer, that I really like.
And one of the things that I did on my most recent home tour video, Daniel, is I thank you he got me this information. So if you have for folks in Georgia, if you have a listing and you want to kind of advertise in a way, you know how sometimes if you've ever been in a new construction home or new construction community, and the sales agent will say, well, if you bring us any buyers and they use our preferred lender, you'll get, XYZ. Well, now on my own listing, I get to use kind of those talking points to say, hey, if you're interested in buying this home, and you use our preferred lender, you'll get $2,500 in closing cost credit out of the gate. That is just a value add for us as real estate professionals, that if you're not super confident in necessarily what to say, just saying that alone, if you're working with buyers, that means at least they have that money that they can use towards paying you. If you all are touring homes and you run into a situation where, the listing agent and or the seller is not paying our full commission, well, now the buyer, let's say they're only paying us, I don't know what equates out to 2.5%, for example, and then that other 0.5, if you're agreeing to 3% representing the buyer, maybe that's not, something that they financially have. Well, now they can use these dollars, the 2,500, to add to whatever you're getting. So it's kind of a way to make sure that you are not working for free, and it sells you as the professional, as a person that's adding consistent value, to buyers as well as sellers if you're representing on the listing side. So I think that's incredible. And Daniel, we're in every state except which ones?
I have to pull up a map. Let me see if I can pull up one really quick, because I don't know them all
I know New York is tricky.
Top of my head. New York and Hawaii are the ones that definitely we don't have those. Let me see the other ones really quick. We kind of wrap around the U.S. I mean, we have Texas, California, Georgia, Florida. Let's see here. Maryland and Virginia are just added, I believe, like this quarter. They were just added. And I'm trying to figure out where. I have a map. I'll pull it up, and can I even share? Yes, I can.
Nothing showing if you're sharing it.
Nah, not yet. It's not. Okay.
There it is.
I think it should be going now. Where is this thing at? We do have a program that's called Real Originate, and if you get your loan officer license and hang it with One Real Mortgage, regardless of what broker you're with, you get paid on the loan side, like you $500 per 100,000, because you're able to be a loan officer with us. That's a lot more. I can get into that, and then downlines with rev share, but that's later. Anywho, I think this is most updated without Virginia and Maryland. So we kind of just like wrap around the states. And I know Nevada is one of the next ones, in Tennessee. And they are going to have every single state to mirror Real, but truly Hawaii and New York will be the last of the last. They
are tricky to do any kind of business in New York.
Yeah. I mean, you got to be proficient in lava insurance. And have you ever even looked at lava insurance policy? So, yeah, they're different animals.
All right. Awesome, man. Awesome. Well, I appreciate you. Was that everything, or did you have anything else you wanted to share? No,
that's it. Just a normal update. Be on defense. Nothing too crazy happened, but there's a lot of crazy news articles right now. But no, that's it for the most part. And then if anyone has any questions, I will drop my cell phone and my email and everything in here.
Yes, and Daniel can help you regardless of what state you're in. He has professionals that he works with that he can connect you with if you're in Texas, Georgia, wherever. As long as we have a presence there, Daniel is happy to make that introduction. I know several of you on this call are working on or have already obtained your loan officer license. So that's a dope way to make sure that, again, if we're in a situation where the seller's not paying our full compensation, you can soften the burden on your buyer clients, because you will be getting a compensation if they decide to, use One Real through you having your LO license. So other brokerages don't allow that, but we here at Real have found a compliant way that you can have your real estate license and your loan officer license and get paid from the same transaction. Other brokerages elsewhere, you can't do it, but Real is always on the innovation tip. So I love that. All right.